Hi everyone, welcome back to those of you who were with us a few minutes ago for I suppose the first part of our Forex session this afternoon here in the UK. I know some of you have maybe joining us for the first time, so if it's either the first or the second time, thank you for taking the time out to come and spend it with David and myself. But before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just very quickly, for those of you who are just coming along for the first time, we're going to obviously looking at the charts. The title of this webinar was looking at what we call currency strength and weakness, but it's a little bit, there's a little bit more to that definition if you like. What we also look at is the analytical method that we use to that we apply to our chart reading, and we use something called volume price analysis, which is the relationship between the price action and the volume, not only to tell us what is happening now, but what is likely to happen next. But as I also explained, we have what we call this 3D approach to the Forex market, and it's technical analysis, fundamental analysis, and something that we call relational analysis. And relational analysis is really a look at what is happening at the broader market, and in fact at the other three main capital markets, because they are all interconnected, interrelated. And the reason we do that is because it then gives us this all-important window into market sentiment. Market sentiment drives, if you like, the mood of the market. Is the market feeling lucky? Is it feeling happy? Or is it in what we call a risk averse mood, as it were, in which case it is moving into safe haven assets, such as treasuries, such as defensive stocks, as it were. And that sentiment is also reflected in the individual currencies, because they are representative of whether the market is either risk on or risk off. Now, more specifically, what we need to see to try and identify a potential trading opportunity is, where is that money flowing into? Is it flowing into a currency that represents positive sentiment, or is it moving into what we know as a safe haven? And the safe havens are things like the dollar, the Swiss franc, but also the yen. But the yen and the dollar, they can be both a safe haven and also a risk currency. If they're flowing out into one, that means they're flowing out of something else. And if we take it on the basis of sentiment, that is going to be reflected in our commodity dollars, and that is the Canadian, the Aussie, and the Kiwi. But as we saw earlier, the positive sentiment that is going on at the moment, and I can see over on the Nasdaq and the Dow, they're both still going up, as the physical market has opened, and that will be reflected in the buying of Aussie dollar and Kiwi. But as we also saw on the currency strength indicator, they were looking a little bit overbought on the hourly chart. So it'd be interesting to see if, in fact, is Forex going to lead the other markets, or is it simply, things can stay overbought and oversold a lot longer than you and I can stay solvent. So that's the first indicator we're going to have a look at, is the individual currencies, what's flowing into which currency. Then we have the matrix, which takes that data and ranks the strongest, if you like, and the weakest pair. Where is that, which of the pairs is attracting the most flows, as it were. Then we have the currency array. There's really a strength of trend, and what we really want to highlight today is, in fact, there are all these indicators come with a default setting, but you can play around with the setting. Basically, you can cut down the number of look back periods, or you can increase them. And the currency array is quite an interesting one. I use the array very differently to what David does. David uses it with a longer look back. It uses the default one, but I've actually cut it back to it's more in tune with the matrix. But that's maybe because I don't stay in as long as he does. And then finally, we've got the heat map, which looks at the performance of the pairs in multiple time frames. So I've got MT4, which is here, and in fact I've landed on the New Zealand yen, and we can see here, this is what I meant by saying it's, you know, it's at the top of, this is the hourly CSI that we can see here. You know, there has been buying of the New Zealand, still quite strong buying of the Aussie. And what this indicator does is, even by the, if you like, the angle of the lines that are on here, can give you a clue as to, you know, is there some momentum behind the move? If it's going up like this and it keeps coming down and going up again, yeah, it's kind of flapping around a bit. Whereas if you have a really nice strong move higher, then you know there's a bit of oomph behind it. Now, what's interesting, if you look at the British pound, is actually personifies that. If you look at the pound up until sort of very recently, now it seems to have really put on a bit of a some momentum, as it were. So that's what we mean: identifying what's been bought, what's been sold, the amount of momentum behind that, and you can deduce that simply from the currency strength, what we call it the currency strength indicator, but it's really the flow indicator. And what we want to see is, we want to see equal pressure. Ideally, we want to see equal pressure on the buying side and the selling side. And then what happens is you then end up with a really, really nice little strong move. In fact, if you hop back on this one, this is ideally, this is what we want to see reflected, and that will be picked up initially, as I said, by the CSI, particularly in multiple timeframes. Right, I'm just going to pass over to David, because he's got NinjaTrader and he's got TradingView as well. If you've got any questions, please just pop them into the chat box. I'm more than happy to answer them, anything that he and I say. Meantime, the indicators themselves, you will find all the details, the videos, the support pages, everything you need to know about them. The cost, obviously, if you've not invested in them, you will find at quantumtrading.com. And we also have now an education program where it comes, they come with the indicators plus everything you need to know to become a Forex trader, and also the opportunity to apply for the funded Forex program, where basically you trade our money. But I will pass over to David.
Thanks, darling. Hopefully you can hear me okay, and hopefully you can see my screen. Looks as though you can. Good stuff. Okay. I've gone back on to the Anna's talked about the currency strength indicator. And what I'm actually going to do is I will do this towards the end. I'll actually go through the steps that we always advocate. Let's switch that off. See that. Which we always advocate in using the indicators and the steps, if you like, the walkthrough steps of actually using them as a grouping. But I've got the currency array up here, and as Anna said, you can change the settings. If I just click on here and go into indicators, you'll see up here on the CSI that the look back period is actually 80. So this is actually the default that they are delivered in. And that is very, very different to the currency matrix. It's a question we get asked all the time. Why does my currency matrix look different to the currency array? Why did you develop the currency array when you've got the currency matrix, blah, blah, blah. And that's the reason. There are several reasons why, but one of the primary reasons is that this it looks back over a much longer period. It gives you a visual picture of the strength of a trend purely by the angle of inclination of the line. So you can tell these are very strong. You know, the trend here is very strong. It also gives you the same view, but over a longer period in terms of the river of sentiment towards that currency pair. And the yen's nice and easy in that respect because it's always the counter currency. So you will actually get a complete visual picture. If all these yen pairs are pointing up into the sky, then you know that the sentiment, the universal sentiment of selling of the yen is across the complex. You know, there's no diversification, there's no currency pair that's going in the opposite direction. Now, what's interesting at the moment is, as you can see from the pound yen, a few minutes ago when Anna first started, these were all up here, and the pound yen was actually down here somewhere. So for whatever reason, the pound yen is out of kilter, it's out of balance with what the rest of the market is doing. Clearly what the rest of the market is doing right now, we've got buying of Aussie, we've got buying of New Zealand. Where's the CAD? It's down here. But essentially, it is, for the time being, certainly in this, where are we, 15, 20 minutes into the open, the sentiment is still risk on. You know, it's still a positive view. Money is chasing higher risk for higher return and is quite happy to take that on board in the current environment. And that's really what this is saying. From a trading perspective, if you were looking to trade with the flow, then certainly the pound yen would be a more risky proposition. Now, you might argue, and I wouldn't disagree with you, that if this strong buying of Aussie and New Zealand, this risk on sentiment continues strongly, that may well be enough to pull the pound yen into line, if you like. In other words, to pull it up with the others. And therefore you could consider the pound yen as a good possibility for getting in early to a reversal in trend. I certainly wouldn't argue with that logic, if you will. But if you were trading the pound yen in isolation, totally oblivious to what was going on in the rest of the complex, then I would say it is a much higher risk proposition because you're not trading with the flow. It's perfectly fine to trade against the flow. The analogy, I'm sure you've heard it many, many times before, I've used it hundreds of times, is of a river. That is what you are looking for all the time. Ideally, I know trading is not an ideal world. It doesn't always work like this. But in the ideal world, what you really want is the entire complex trading in the same direction. Because that is a lower risk proposition. It means you are trading in the direction that everyone else is trading. Now, your currency pair may be moving at a slower pace than everyone else. It may be, maybe you've picked the best one. And really, that's what the currency array is showing you at the moment. It's showing you which are the strongest, which are really leading the field. You know, these have got the strongest trends because they're the most rising the most sharply on the gradient. These are less steep, so they're less strong in terms of the trend. And that is how you unpick it all. Obviously, I've got multiple timeframes here. We use everything in multiple timeframes. So out of the 10-minute, you've got a similar picture. And here, they're all above the midpoint line, if you like, which is the fulcrum of positive to negative, if you will, or risk on to risk off in this particular scenario, because we're dealing with the yen pairs. What we also did with the indicator down the left, in the second column here, is to actually try to give you a sense of when a currency pair is moving to, and rather than on the currency strength indicator where you're dealing with individual currencies, here you are looking at currency pairs, whether a currency pair is actually getting towards an overbought, which these are in terms of brackets, so the darker color with a little brackets around the OB is overbought, so that's getting towards an overbought. Down here at the bottom, we've got the pound Aussie, which is moving towards potentially an oversold situation because it's darker red and it's in brackets. If that actually goes to a potentially oversold situation, then it would change to a bright red color, the brackets would disappear, and also the line here would go solid. That's not to say it's not a signal, it's just an alert, if you will. It replaces an alert that this is potentially something you consider, and then if you see those and you are a reversal trader, and we're not all reversal traders, I am heavily reversal based, but not all traders are because it carries greater risk. And the risk is you have to put more on the table in terms of a reversal opportunity, because a reversal opportunity doesn't just happen. It doesn't just snap into place the minute you place your order. You think, great, okay, I'm at the top of the trend or the bottom of the trend. Now I'm going to get my reversal. Fantastic. I'm going to ride all the way up or all the way down. It doesn't happen like that. You might be sitting there for 5, 10, 15, 20 minutes To go back to the train analogy, it's like waiting for a train. You've got to wait for the train to arrive before you can actually jump on it. Now, you don't know how long that's going to be. It could be a long time, it could be a short time. The difference in trading is that you've got to allow for that, and you have to allow for that in buffering. Your stop loss has got to be that much wider. You can't have it tied up against the price, because you'll just get chopped to ribbons. So you have to set a wider stop loss. That means more risk on the table, but more risk equals more reward. That's the way trading works. If I'm prepared to risk more, I should be rewarded for it, and you are. But you have to put the money on the table first. Your reward is you get in at the trend early. A trend trader will jump on the train after it's left the station. They haven't sat there for half an hour twiddling their thumbs, wondering whether the train's going to come in on time or not. They've just jumped on the train because they've seen it arrive, jumped on board, and off they go. Happy days. Their stop loss is much tighter, their risk is much lower, but they've missed a lot of the initial trend in giving up that opportunity. So that's where we are in terms of the yen. Let's just go back onto the currency matrix and show you that. There we go. It's a similar scenario. Yes, the currency matrix is showing you sentiment, because if sentiment is universal, then you want to see this bunching effect. You know, we've got the Aussie buying here. We want to see this Aussie dollar move up here, the Aussie CAD move up here, the Aussie New Zealand move up here, and equally likewise, we want to see the Euro Aussie move down here and the Pound Aussie moving down here. Now, the other thing, obviously, you're looking to unpick in this analysis is that when you see something like this at the bottom or the top, you want to really know whether it's being driven, which side of the equation is driving it. Is it being driven by the pound, or is it being driven by the Aussie? And that's really what you have to unpick, because ideally, when you go back onto the CSI, let's go back onto the CSIs. There we go. What we're seeing in that scenario is precisely that. We are seeing equal strength of selling of the pound counterbalanced with equal strength of buying of the Aussie. So again, it's a combination of using the indicators together, because that's the ideal combination. Yes, you will get trends where you've got very strong selling or very strong buying in one particular currency, which is not necessarily mirrored inversely by buying or selling in the opposite currency, in your counter currency. But the ideal scenario is precisely this, where you've got very strong buying in the Aussie. That is going to generate a very strong trend in the pound. You don't need to look at a chart to know what's going on. I can tell you that for now. On this time frame, on this time slice between 1 minute and 5 minutes, that trend will be very strong. It's also rolled over into the 10-minute. We're getting up into overbought. Now, does that mean this is going to roll over very nicely for us? Let's say we're a reversal trader. You know, the Aussie has started plunging on the 1 minute, so we've got there's a pullback or a minor reversal coming into effect. But on the 1 minute, you've also got the pound turning down. It's kicked up a little bit there. So in terms of what's going on here, you've got the two currencies moving in the same direction. Two currencies moving in the same direction is not going to deliver a trend. It's going to deliver a congestion phase. So on that faster time frame, right down on the 1 minute, 15, 30 second, whatever, this will be a little congestion phase, because the pound and the Aussie are moving in the same direction. And it all comes back to this whole business of, what is your time horizon for taking this trade? Are you a scalping? Are you just in there for seconds, for a few minutes, or are you out here longer term? Because if you're out here longer term on the 10-minute, nothing much has changed in terms of the dynamics. The Aussie is still moving higher. It's into overbought, but that doesn't mean that it's just going to roll over straight away and deliver you a nice reversal trade should you choose to take it. It may not. It's what I said earlier on. You have to be patient. You've got to set a wider stop loss, because this could stay up here for some time. It may even go higher. This is only just arriving into overbought. This hasn't actually the pound hasn't actually got into oversold yet. Just move the chat box out of the way, move it over there. So these are the decisions that you have to make. In terms of the process, this is the starting point. This is because this is where all the currencies themselves are isolated out from the currency pairs. It gives you a starting point, a position where you're looking at the currency in isolation. It's been distilled out from this complex web of risk sentiment in terms of all the currency pairs, and you're looking at them in isolation. This is the starting point. It's the radar on the market. So you pick off the pairs. Am I looking at this from a trend perspective? Do I want to get into a trend that's already underway? In other words, I've got a currency pair that's already developing. So maybe here, if we see the Aussie start to fall and the pound start to rise, that's a trend that's underway. I might want to jump on that trend. Am I a reversal trader? Do I want to pick off the tops and bottoms? Am I prepared to be patient? Do I want to put more risk on the table? This is the starting point. From there, you go to, obviously you look at your charts, you're looking at it from the chart perspective. In terms of where you go next, in terms of indices, you go to the currency matrix. As I say, this is where you'll find this is much more down at the scalping end of the market. It's delivering the river of sentiment, as I outlined before. But if you look at the in terms of inputs, look at the look back period. It's 7. It's very close to the market. So this is much more a scalping environment, but nevertheless, it gives you that information. Running the currency matrix alongside the currency array is ideal. It's exactly the same as running the trends indicator, which is very close to the price action, alongside the trend monitor. Exactly the same principles apply. You're looking at 2 different time frames, and it's giving you all that information. Then you're off to the currency array. There we are, which we were looking at earlier on. Just see how that's developing. The pound is still down here. These have come off a little bit. They're just sort of flip-flopping around. It's not terribly strong. That buying here on 1 minute is not as strong. This is actually, I think it was up here before. So that pound yen selling is back again. It's back down here. I think it was up here somewhere. It's swung down again. Maybe we will start to see these come off a little bit. Let's have a quick look at, right, this is what's happening on the VIX. No great surprise. This is the VIX on 1, this is the VIX on 3, this is the VIX on 5, and this is the VIX on the daily. Yet it's very strong downtrend in terms of VIX, so it's inverse to risk sentiments, I'm sure you're aware. But this is what's going on intraday. This is live. This is what's happening. So the VIX is starting to rise. It's starting to rally quite strongly. And if that happens and if that continues, then you're going to see those yen pairs come off. They're going to start reversing. And if you're a reversal trader, happy days, this is what you're looking for. You're looking for signs that that yen pair is actually going to come off and actually deliver you a nice reversal trade to the downside. So that's why these are starting to weaken now. And whatever starts on 1 minute or 2 minute rather, will then ripple over into 5 minute. You'll start to see these step off the top, and the same here ultimately if it ripples through to 10 if this is a genuine move. And obviously what you'll be looking at, seeing what's going on in terms of the indices themselves. You're down here. A lot of volatility as always. You always get a lot of whipsaw in the first 5, 10, 15, 20 minutes. You can see the NQ is actually moving south. The YM is trying to hold up, as is the ES, but the NQ seems to be potentially leading the way and coming off that positive start. Finally, the last indicator we look at, which you don't have to look at, but because it gives you a different perspective, and that's the currency heat map. The currency heat map gives you 2 different things. It gives you a perspective across the entire matrix from 1 minute right the way out to the month over here in terms of these cells. Are we looking bullish? Are we looking bearish? What's the color of the cell? Does that color of the cell change as we watch, as it goes from 1 minute through to 5, 10, 15, and so on? And the second aspect of the array is the ladder on the left-hand side here, which is very, very different. This is a weighted array. This is not the array. This is not the ladder of the array or the matrix. This is a weighted matrix. And what the weighting does, it actually takes account of the bullish or bearish sentiment by time. Because if you think about it logically, a change in sentiment on a 1 minute will have far less significance to one on 15 minutes. An hourly will be more significant than a 15, and so on. A change in day is going to carry far more weight. That's a universal trait of trading. What happens on a slower time frame is more significant, carries more weight, in other words, than what happens on a 1 minute, 5 minute, 10 minute time frame. That's just the nature of trading. So what we've actually done on this ladder here is we've actually incorporated that into the weighting, the ranking, if you like, so that where you see a pair like the pound New Zealand at the top here, that is potentially at a reversal point, but it's not going to move up and down the ladder like the pound New Zealand would move on the matrix or the array. It might move this afternoon by a slot, it might move by tomorrow morning by a slot, it might move by the end of the week by a slot or two, because it carries this weighting element. So this array here is much more the territory if you are a slower term swing or trend trader. Perhaps you don't have the luxury of sitting in front of a screen all day long, but you actually want to take some trades and put them on for longer term. You put some order entries in, you put some orders on the system which are triggered. Then you can do that trading this way, and you know, this is looking at the perspective of what is overbought and oversold from a long-term time frame. Yep. Just going to transfer over to Anna. Break off there. Hold on a minute. Yep.
Sorry, apologies. We have run on slightly over time. We've got a couple more sessions to get through, where we're going to have a look at the stock market in general and stocks in particular. So if you want to come along with to them, you're more than welcome. But I just wanted to show you how all that is represented on the chart. And this is the profile for, as we can see here, the pound Aussie. And, you know, it's the Renko again, the break lower, as I explained, the pound suddenly turned lower. Levels, we didn't talk too much about levels today. We're just talking about, you know, in broader terms, in identifying if you like the flows, but obviously this is only one part of is one element of what you have to consider. But we thought we'd start with that, and then you have to tie it all together. And you know, the most important tie is the support and resistance, and obviously the multiple time frames. Now the thing at the moment is, well, where is this going? Because as I said, this is what we want. This is what we want to know. Are we looking at this reversal? We're going to have to see some strong volume coming in on this pair. But because the pound has got a lot further to go, the chart, you know, the chances are it will carry on falling, but maybe fall against another currency. So yes, there will be selling of the pound, but this one will come to its own pause point. The pause point that we have a look at is we get a look at our levels. We've got the 6th Camarilla level here on the daily, and it's also on the hour as well. We can see the momentum, you know, that the momentum is kind of draining out of this particular move, and we can pick up that momentum because, you know, that's what the Renko chart does. As I said, it is not time. It is simply the number of pips going through the market. Each one of these little bricks represents, I think I've set this at 3 pips. And while David was speaking, it was really pushing lower quite quickly. Now it's kind of, you know, slowing down because, first of all, as we can see here, the New Zealand is kind of flattening off. It's probably rolling over maybe slightly on the faster time frame. And, you know, you say, okay, maybe a reversal is going to be possible on this one, but we will have to wait. Okay, anything else you want to add to that, or is that it? What can I say? Thank you so much for coming along. It'll be an interesting, I'm going to follow this up later on this afternoon. These will be recorded and they'll be going up on Facebook and YouTube as well. So thank you so much for coming. If you're not joining us later, hopefully we will see you again next week. In the meantime, take care. Enjoy the rest of the trading day. Have a great trading week, and we'll catch you next time.